Okay, so now what we're going to talk about is improving your scores prior to purchasing or refinancing a home. All right, so we talked about paying off collections prior to escrow and what the dangers could be, and here's what they are. You may have less money for a down payment, less money for closing, less money for reserves. The bank or the lender is going to make sure that you have 2 to 6 months, perhaps even a year of closing costs after you make your down payment, after you pay your closing costs. Okay, they want to see that you have the amount of payments in case you lose your job, you get sick, for unforeseen occurrences. So you need to have extra money. So the moral of the story is here, before you pay off collections, before you pay down your credit cards. We're going to talk about paying down credit cards and how they affect your score on the next video. But before you do any of that, make sure you talk with your lender first, your officer first, and make sure that you get approved before you start looking. I know I skipped ahead a little bit here. The ideal way is to pay your collections at closing because they're not going to lower your score immediately. Okay, so you may have a loan, you may have been approved, you start paying things off. It could take away from the money that you have for down payment, for closing, and it could lower your score, meaning you may not qualify for the mortgage any longer. So make sure you check with someone first. Okay, now if you're paying your collections at closing, I mean, obviously you should have already found the house and you're in escrow, you're in contract, under contract to purchase the property, or you will be purchasing a home soon. Okay, that means don't pay them off before you start looking or before you get credit approved and before you figure out exactly how much money it's going to take. Know your costs first.